Then I'm going to go ahead and share my screen. Okay. Well, thank you all again for being here this afternoon with us. My name is Katie Killen, and I'm the Housing Program Manager for Mid-America Regional Council. This workshop is presented through our Greater Kansas City Regional Housing Partnership work that we do in partnership with LISC of Greater Kansas City. I just want to cover a few logistics before we get started. This is a very popular webinar. We had about 70 folks register for today alone, and we had about that many participants at our first one as well. Seeing that, we will have a little bit of time at the end for some questions, but if you have questions, please put those in the chat as we're going, and Becca with MCLT will be answering those in real time. Because we have so many folks and we might have so many questions come along, please know that if your question isn't answered, we are planning to put out an FAQ after all of our webinars have concluded, and those will be shared out so that you can also see questions that were asked in webinars you were not attending. Additionally, the slides will be available, and we will have a survey as well that goes out to folks that I'll talk a little bit more about. So just have a few introductory remarks to provide a brief background on the Regional Housing Partnership and to also set the stage for today's webinar before I hand it over to Megan Freeman, the Executive Director of Marlboro Community Land Trust. So in terms of background, the Regional Housing Partnership came out of an identified need for a convener and connector within the affordable housing space in the Kansas City region in late 2019. There were many efforts and still are taking shape in communities around our region, but there was an opportunity, a need, and a want for more coordination to really look at this issue at a regional level. So from various studies that were taking place and through a series of interviews with folks in the affordable housing space, the Regional Housing Partnership works as in this space as a convener and connector to amplify the work being done. And it is coordinated around these 7 elements of work to make a more effective housing system for our region, with the ultimate goal to create more housing of more types at more price points and more places across our region. And the work for the Regional Housing Partnership really kicked off last year around many of these elements. One specific area of focus is in the financing tool. There was an interest throughout the region of looking more at different shared equity models. So recognizing that need, Regional Housing Partnership was funded to explore what a coordinated strategy for a shared equity model tool might look like. MCLT, the Hoxie Collective, and Screen Door Consulting that make up our consultant team was selected from an RFP process to oversee this work. Since last fall, they have convened stakeholders, engaged in research and discussions with many key players around the different shared equity models for the first phase to select one to build the business plan around, this initial business plan around, and the CLT tool came out as the one to pursue for this work. Starting really at the end of last year and kicking off at the beginning of this year, they're moving into the second phase of really developing that business plan, understanding that communities and organizations and groups are all at different stages of understanding what a community land trust is, and if that's something that their community or group wants to explore and pursue. And so they have really built community engagement in 3 different ways to get a good sense of where the region is with this tool, how existing CLTs or those that might be coming online can really coordinate and maximize their impact for the region, and also take into consideration those that might be joining or scaling in the coming years. I would say the 3 areas of engagement that they've been working through are with existing community land trusts to see where everybody is, see what can already be coordinated, engaging with communities that are a little bit further along than I would say the exploratory or educational phase. So have property that they've identified, had been having discussions about community land trusts with some in-depth community outreach that includes residents, community leaders, and community organizations. Those areas are in the Independence, Inglewood Arts District, the historic Northeast Kansas City, Missouri area with Jerusalem Farms and neighborhoods up there, the Excelsior Springs area of Missouri, as well as with Habitat for Humanity of Kansas City with the development they're looking at in Johnson County. And then finally, this broader community outreach of just making sure that we have a baseline in the region of understanding the mechanics of a community land trust and some of the benefits of those. And so there will also be a follow-up survey from today to gauge where folks are at that attended this meeting that can be incorporated as part of the next phases that the region could pursue in coordination of the Community Land Trust tool. Additionally, that business plan will also look how this tool can work with other affordable housing tools that are out there, as well as shared equity models, other shared equity models. So saying all that, I just want to set the stage and say, first, the Community Land Trust tool is only one tool that can be used in the region. We imagine there will be several that will be refined and tested and explored further in coming years. At this time, there was significant interest in the Community Land Trust, and it has a long history. And additionally, these webinars are really there to create a common understanding of the tool and help answer some basic questions around the mechanics. So that's what Megan's presentation will cover, but certainly happy to have more questions in the chat and to include those in the FAQ. And with that, I will stop sharing my screen and hand it over to Megan.
Wonderful. And I will work to start sharing my screen. All right. Oops. One slide too forward. Thank you all for being here today. Having been a facilitator for much of my career, I want to apologize in advance for the amount of information sharing that I will be doing as opposed to having a little bit more interactivity. There is a lot of information to share about community land trusts. And I want to recognize that although there are all different levels of knowledge on the call, we are going to try to keep the information we're presenting to the very basic beginner level so that everybody can have a foundation. Please, again, as Katie mentioned, feel free to type questions in during the presentation. I will start off sharing just a little bit of background about community land trusts and a little bit about how they can be beneficial to the communities. Then I will get into sharing the actual mechanics of how a community land trust works. So don't panic, that is coming. All right, so starting off, what are community land trusts and why do we need them? So as Katie mentioned, it is a type of a shared equity home ownership. The land trust acquires and owns real estate in perpetuity in order to pursue some specific community-focused goal. In our case, the community-focused goal is perpetually affordable, high-quality housing. Classic CLTs, which MCLT is part of, are characterized by duly owned property, right? That's how you get the shared equity. The land is owned by the community land trust and the home is owned by the buyer. And that buyer is earning below the area median income. CLTs really are a controlled response to the real estate market that has been very focused on profit and has often excluded low-income buyers. One of the things that I think is exciting about community land trust is their history. They have been around for a long time. They have continued to morph and develop to meet the needs of the communities yesterday through today. So the very first community land trust was in 1968, was actually in rural America, was started to help Black farmers who were struggling to have opportunities for land ownership. As the concept continued to grow and be used, it was really recognized that it was a great tool for urban communities as well, as communities started to see gentrification and displacement occurring. Today, there are over 260 community land trusts across the country, and I think that's exciting. We, Marlboro Community Land Trust, began in 2019, and we just happened to be the first community land trust in the Kansas City, Missouri area. But we do have plenty of partners that we can lend or get expertise from. So I want to just point out what some of the benefits are of the CLTs and dive into each one of these a little bit. They increase access to home ownership and safe rentals. They increase personal wealth and community wealth, stabilize households and communities, retain public funding, and provide opportunities for community control. Talking about the first one, the increased access to home ownership and safe rental. Over the past 2 decades, access to home ownership has gotten more difficult for many Americans. However, the interest in home ownership remains very strong. It is, still the American dream to own your own home. In turbulent housing markets, as we've experienced both in the 2008 to 2010, and then just recently with the real run-up of housing prices, the families that are the younger, lower income people of color really have particular difficulty accessing home ownership opportunities. The Shared Equity Home Ownership Program helps to make homes affordable to lower income families by investing either public or private resources to reduce the initial sales price of the home and then keep that price affordable for all future home buyers of that property. Increases in personal community wealth. So it probably does not surprise you that housing equity makes up about 2/3 of all wealth for typical median households. The median net worth of homeowners in 2016 was $231,000 compared to $5,000 for renters. So a big disparity between individuals who are owners versus renters. And we are also aware that government and banking policies have prevented Black, Indigenous, people of color from acquiring homes and have continued to reinforce that racial wealth gap. This is, the graphic there on the right shows you a little bit about the average and the median of white versus Black owners. So you can see significantly more wealth in the white population. So it stabilizes households and communities. From 1995 through 2017, the average annual move rate of someone in the shared equity sample or model was about 2.6%. In comparison, nationwide, 14% of households were moving each year. So in general, the individuals who were in a shared equity property were staying put longer. 74% of shared equity homeowners stay in the same house for at least 6 years. That lends to that community stability. Secure housing is central to families' physical and mental health. It also equates to educational opportunities for children, employment options for parents, commercial investment, and safety in the neighborhoods. It has been borne out through a lot of research studies that the CLT home can create a thriving community. And in the case where poor children are growing up in a thriving neighborhood, they are much more likely to become economically stable as adults than poor children that are growing up in an economically depressed neighborhood. So here's an example of how the Community Land Trust stabilizes households and communities. So what you're looking here is data about community land trust home loans versus market rate home loans. We had serious challenges, as we know, in 2009 through 2010, with delinquencies, and foreclosures. But look at the percentage and how low it is for individuals that were in the community land trust mortgage. It is significantly less. In fact, in the majority of times, less than 0.5% of community land trust home ownerships end in foreclosure. And there are a lot of reasons for that, which we'll talk a little bit more about. Also, one of the things that is exciting and positive and progressive is the retention of the financing. Frequently, there are programs that will provide, let's say, grant for a first-time home buyer. When that first-time home buyer sells that home, they sell it at the market price. That grant, that subsidy is gone. Whereas in a community land trust model, that subsidy continues to support the next family that moves into that house and the family after that. If you take a look at the graphic on the left, this graphic is explaining that more families can be served in a shared equity home ownership program. So the number of low-income households boosted into home ownership by an investment of a little bit more than $2 million results in 152 homeowners if in a conventional subsidy program, like those first-time homebuyer grants. Conversely, in a community land trust model, that same investment of a little over $2 million can actually help boost 357 homeowners into homeownership. Similarly, in the graphic on the right, you need more subsidies with the conventional homeownership programs. So if we say 357 people can become homeowners using that $2 million investment, in the traditional conventional subsidy program, that same number of households getting into home ownership would cost in excess of $10 million. So it is the reusing of that subsidy that makes the community land trust so valuable. One of the other pieces that I feel is significant about community land trust is it's called a community land trust, and therefore it is controlled by the community. So there is a board of directors that governs every community land trust, and that board of directors is what we call a tripartite board. So there are individual allocations to 3 different types of board members. One would be individuals who own community land trust homes in the neighborhood that the land trust is working. Another would be other neighbors in that community. And then that third portion is reserved for industry experts. So for example, the Marlboro Community Land Trust Board currently has 12 members. We have homeowners, we have residents, and then in that section of community experts, we have a realtor, we have a lender, we have a builder, we have other banking services. We also have a lawyer, so that there is support for the community from people who have expertise in the field of housing. The other piece about that is that the community land trust is really meant to provide a financial backstop to help prevent loan defaults. It is reviewing the home buyer loan product to prevent predatory lending, which has happened a lot in our urban communities. And it's set in some cases, this is a choice that a land trust can make. It sometimes decides to set aside funds for ongoing maintenance of that home. The goal of the land trust is really to balance that individual asset accumulation with the other goals of the community, such as stabilization, revitalization, affordability, and home quality. So who are our typical community land trust buyers? In many cases, it is a first-time home buyer, because those are often the people who are struggling to get into that home ownership market. Sometimes they have limited funds for down payment. But because this is an ownership program, that individual does have to be able to qualify for a mortgage. So they need to have a good work history and they need to have credit. They would be pre-approved by one of the banks that offers community land trust mortgages. They are often buyers who are ready to purchase, but can't find anything of quality in their price range. Just anecdotally, I got a call from an individual a couple weeks ago who said she's made several offers on properties and has not succeeded in getting a home. Sometimes it's been an investor has come in and bid all cash. She's using an FHA product, so other buyers have had loans with less restrictions. She's seen just really poor quality for what she can afford. So she is really the buyer we're trying to serve. We are trying to help those individuals get into that home ownership possibility. The individual has to be willing to complete a community land trust application. We do require that all buyers go through a home buyer education course. And that is because that really helps to educate that individual about what does it take to own a home, and is it really something that they're going to be comfortable with that will work well for them. We do also require them to attend a orientation to the community land trust model so that they are totally aware of what they're getting into. So how does the process work? A lot of background and kind of discussion about what they are and what they can be, but how do we actually manage the homeownership process? So Marlboro Community Land Trust is a tax-exempt nonprofit organization. We acquire property to be able to create affordable homes. We renovate properties or we build new homes, and we sell those homes at a subsidized price to eligible low-income, often first-time home buyers. That subsidized price is typically about 20% of the actual market value. The land trust retains the title to the land, and the homeowner takes title to the home. So let's look at just a minute at eligible buyers. The buyer receives the deed to the house, and they agree to a 99-year ground lease with the land trust. And that's basically the document that governs the relationship between those two parties. Just sets out the rules so that both parties are well aware of what the expectations are. 99 years, because that's just demonstrates that it's there for the life of that individual. It's not something that we're going to come back and revoke. It is a long-term commitment to this model. That individual uses the land as their own. They pay real estate taxes. And one of the bullet points that I think is probably the most important is that they enjoy the full support of the community land trust. And so if we look back at the graphic about the delinquencies and the foreclosures, one of the reasons that there are so many fewer foreclosures is because the land trust is standing behind that buyer. So I have relationships with all of our homeowners. And if something is amiss or they are having issues, they have someone they can reach out to support them. So again, anecdotally, the individual who was our second home buyer or first home buyer had an issue with his roof. It was the one home so far that we haven't put a new roof on because it was determined one wasn't needed at the time. But he'd been there for about a year and he was experiencing some roof leaks, and he was very distressed because he just didn't know what to do. So I was able to say, well, here's some trusted contractors that we've used. Here are, 5 names you can call. And he did that. He did the outreach, but he was like, I'm nervous about being here when they come to do the estimate. What if they ask questions that I don't know the answers to? And so I said, no, I would be happy to come with you and be here when they visit. So I was at each of those meetings. Then we sat down, we looked at all the bids. He was able to make the decision, but he felt a lot more confident because the land trust was there supporting him. So basically all of that part is very similar to a market rate home. What really is different is when that owner is ready to sell that property. They are going to sell that property in agreement with the ground lease resale formula. So how has this particular land trust agreed that the resale process will be done? And really what it is that the owner keeps some portion of the market increase, but the majority of that market increase stays with the property to keep it perpetually affordable for the next buyer and the buyer after that, thus not losing that subsidy to the market. The result is that there's a new eligible buyer that purchases the home and the whole process starts again. The Marlboro Community Land Trust uses a appraisal-based resale formula. There are different resale formulas that are available. There are advantages and disadvantages to all the different options. We have chosen the appraisal-based method. So sometimes it's helpful, I think, just to walk through a few numbers. Maybe some of us are like, oh, not numbers, but it might help it click a little bit more and make sense. So let's say that the Marlboro Community Land Trust has acquired a property, either a vacant lot or a dilapidated home. We have rehabbed or built new on that property. And we look at the market and we say, what would this house sell for? What's its market value? Let's say for our example, that market value is $100,000. So we want to subsidize the price of that home to make it easier for that low income buyer to get into home ownership. So in most cases, as I mentioned, we typically are looking at about a 20% subsidy. So in this case, that individual would pay $80,000 for that home. The ground lease allows for that individual to get 25% of the increase in the market value when they sell the house. The eligible buyer, the homeowner who buys the house, lives there. There's no requirement of how long they can live there, how short they have to live there. They live there and use the home as they wish. The typical amount of time that that first buyer stays in the home is about 7 years. And the reason for that is because typically land trusts, specifically Marlboro Community Land Trust, are building first-time home buyer homes. We're either building or rehabbing 2-bedroom, 1-bath, 3-bedroom, 1-bath, 3-bedroom, 1.5 bath. And so frequently buyers get to the point where they need more space. So they're ready to sell. So now we're going to take a look at what is the appraised value of that property now. We look to the market, we do an appraisal, and the market says this property would now sell for $150,000. So we're going to look at what the house appraised for when it was first purchased and now when it's being sold. So we'd see $100,000 to $150,000. So that difference is $50,000. That first buyer is going to get 25% of that $50,000 in addition to their equity. So any principal mortgage payments that they have reduced, any principal basically that they've paid off, any down payments they made, they're going to get back just like they would in a traditional market rate sale. They will also get a portion of that market appreciation. So let's say that that buyer is walking away with the $80,000 that they invested initially, minus their interest that they've paid, and they are $12,500. So they're going to walk away with $92,500. And in many cases, that is enough now to get into the market rate home market. A lot of times community land trust can be thought of as the step between renting and market rate homeownership. So you get that assistance on that first purchase, and then you do have money available that then you are able to purchase in the market. So what now becomes the price of the house? We provided the first house to the buyer for $80,000. Now we've given that buyer $12,500. So the new price of the house for the next low-income buyer will be $92,500 instead of $150,000. Whereas if there was no sharing of that market increase and that first buyer was selling it to the market, that whole subsidy would be lost. This is how we can keep the perpetual affordability of this property. So here's kind of the whole model all at once. It is a lot to take in. I'm hoping that everybody's been asking questions as we've gone along. How do we determine who would qualify for a community land trust home? We use the HUD income limits. Those limits change every year. Typically, we'll see those change in about March, and we will update them in April. They go up every year, which is amazing. But it is a relationship between the income of the individual and the number of people in the family. So for example, our second home buyer makes $60,000 a year. And so you think, ooh, she might make too much money. She may not qualify for a community land trust home. However, there are 5 people in her family. So as you look at that chart, you can see that with 5 people in the family, income can be as much as $83,650 and still qualify for that community land trust home. I mentioned that the ground lease is the document that governs the relationship between the homeowner and the land trust. It is a lengthy legal document, and it is important that the individual home buyer understands that document. So as part of our process, we require our buyers to review that ground lease with an attorney. That individual then is acting as a neutral party for that buyer, who can then help explain, make sure that buyer understands what type of an agreement they're entering into. So we do require that both the buyer and the attorney sign off on a document indicating that they have read, reviewed, and understand the document. If we have a homeowner who struggles to be able to afford an attorney, we can help by referring them to legal aid. So how do we get the money to get the properties in the first place? We are fortunate to have a vehicle on the Missouri side of the state line. I am not as familiar with the lawsuits and properties acts on the Kansas side, but we are able to acquire abandoned properties through an Abandoned Property Act lawsuit. And this actually happens fairly frequently in the urban core because often the individual who owned the home dies without leaving a will and without naming a beneficiary for the home. We also have the opportunity in Kansas City, Missouri, to acquire a land bank lot. Those lots are lots that were sold on the courthouse steps because of tax liens, and they haven't sold. So basically the land bank is holding them, waiting for someone to be interested in buying them and putting them back into reuse for the community. Both of those methods mean that we pay very little for the actual price of the house, which is helpful for us because we are doing an extensive rehab or a new build. With the idea in mind that the individual who's earning below area median income is probably not going to have a lot of disposable income to be fixing issues with the house. So we want that house to be a high quality, affordable home when that homeowner gets it. We also have sometimes the option of getting some government funding, housing and urban development, the community development block grant, or home funds can provide some funding that would allow us to maybe purchase a home or spend more money on the rehab than we're going to be able to sell the house for, because remember, we're selling it for below market value. So we can use those funds to offset the costs to the Community Land Trust of the rehab. We also do community fundraising, foundation fundraising, so looking for private dollars to fund that rehab and development of the home. In some cases, we can actually take a line of credit against the home. So we maybe acquire a distressed home and we get title to the home. Therefore, we are an owner and we can take a line of credit. We then do the rehab using the funds that we have from the line of credit to pay the rehabber. And then when the house sells, we pay back the line of credit. And the one caveat I would mention there is that because these properties have had kind of a troubled past, many of them do not have clean titles, and getting a clean title can be a lengthy process. So it's not like that's a slam dunk. Here are a couple of examples of the properties that we have done. This was our very first rehab. And the neighborhood was particularly excited about this property because this was left vacant by a woman who was very instrumental in starting the Marlboro Community Coalition and really organizing the neighborhoods. She died and did not have an heir, and the house was just sitting vacant for a number of years. In addition, there was actually a sewer line problem in the garage, which meant that actual sewage was spilling out into the driveway and into the neighborhood. So neighbors were thrilled when we said we would rehab this house. This was a great situation for the community because there was a gentleman living across the street, 74-year-old retired Vietnam veteran. And he and his wife had rented really their whole life. They had a little 2-bedroom, 1-bath property. But he got custody of his grandchildren and he needed more space. And he really wanted those grandchildren to be able to still go to their same schools. And so this house is a 4+ bedroom, multiple bath house. And when we were done rehabbing it, he was able to purchase that home. This is the second house that we did, and I bring this picture up mostly just to demonstrate that it's a little bit different than our typical house. This house is actually a 5-bedroom, 3-bath house. I think you would officially call it a 4+ because those windows in the front are a bedroom that doesn't have a closet. So technically can't be called a bedroom. But for our purposes, let's just say it's a 5-bedroom, 3-bath house. When we started marketing this house, we were very surprised that the number of buyers who were interested in this size of property. And what we learned was that a lot of our buyers have combined families or multiple generations living in the same household. And this larger size was very advantageous. So this house had been really a derelict in the community for a long time. It had multiple fires set in it. It had been a place of drug exchange. And the house sits right on the corner. So it was really impacting the livability of multiple streets. And we were able to, with some funding from Housing and Urban Development, turn this into a beautiful property that a family lives in. So that's a lot of information. I appreciate you listening. Please share what questions you have. Becca has probably been answering questions left and right.
She has. I was going to say, Becca, if you want to pull out a few that you think are good ones to kind of for the greater good here, maybe discuss further.
Well, all questions are good questions. I think that one of the, so one of the first questions was, how does, like, over the long term, how does the CLT maintain affordability over the long term? And Megan, I thought it could be helpful if you could bring up that slide again that kind of compares the cost to build a certain number of affordable homes in a CLT versus outside of a CLT, and the converse, how many more homeowners a small amount of funding can serve in a CLT. And that is just due to the long nature of the recycled subsidy. So that was one I thought could be good for, there you go. So you can see, and Megan, you can walk through it, but maybe just a quick recap of that.
Yeah, absolutely. So yeah, it just, because that subsidy, so the first buyer gets the initial subsidy, right, of about 20% on that purchase price. But the next buyer is also still getting a subsidy because the home price is staying reasonably priced as opposed to going to market rate. So in our example, we looked at that house was going to sell for $92,500 instead of $150,000.
Thank you. And then one of my favorite questions of all time to get was, someone asked about, well, can this work in a higher income area? And the question is absolutely, of course. The idea that affordable housing should only be in areas that are lower income, is not dignified housing options for all people. And so for there to be opportunities, as Megan and Katie said at the beginning, diverse housing choices, like diverse housing styles for different household types in all different communities. Because probably every single person on this call right now does not live in the house they were born in, right? Everybody needs to move around for different reasons. So to have that, there are CLTs throughout the country in very high income areas. We had a similar question in our last group meeting. And I said the same thing that I will say now, because I just saw it reposted or reshared this week. The Martha's Vineyard Land Trust is currently hiring. I mean, there is a community land trust in Martha's Vineyard. And the idea is that what makes those let's talk about those very high income areas, Martha's Vineyard, right? Like, what makes the exact same house that's built in Martha's Vineyard cost so much more than that exact same house built in Kansas City, Missouri, right? Exact same house, but the prices are completely different because of the land, right? But like, what made the land valuable? It probably wasn't the person who lives in that house right now. So the whole idea behind the community land trust is to make the value that any one person receives for their home, which is actually the value of the land underneath, to more accurately reflect what they have contributed to the home. And so under that line of thinking, community land trust houses should absolutely be located in areas of high income, because a lot of those areas are really high value and high income due to, decades, centuries of public and private policies that should be borne by everyone equally. So that is something that I am personally quite passionate about. So I'm glad someone asked that. And I think it's something for all of us to think about, that affordable housing really belongs in all communities.
And Becca, I will just say you've gotten quite a few more questions. So
yeah, I'll stop talking now and start answering questions.
Well, I'm answering one while you're talking. Anybody want to unmute and speak up and ask a question that I could answer for you?
I think I'm going to answer one that Greg just put in the chat, because this is another one that gets asked a lot. What happens if an owner makes an addition or does substantial repair to the house and does the labor themselves? Are they reimbursed? How is their labor valued? This is something that a community could include in their resale formula, how they wish. So the way some community land trusts don't address it, right? Like, if a person makes a large repair, well, then they get the whatever the shared value is of that repair on sale. Some community land trusts have allowed for a reimbursement of that improvement, but for it to be approved by the board ahead of time, one, and then also the value of the improvement at the time of sale. Because if it's just direct reimbursement, right? If I put, if I was like, pick your 90s, your favorite 90s fat or your favorite 80s fat or whatever, right? You spend all your money putting that in, but you sell that now, and that improvement that you put in doesn't really maybe add to the value at the current time of sale. So CLTs have dealt with this in various different ways in their resale formula. So one, having permission to make the improvement, because again, if I put in a swimming pool, that might be great for me and my household, but that might not necessarily add value. So getting the board permission if they are going to get reimbursed for it. And then two, it being what the value is at the time of sale and not necessarily a dollar for dollar reimbursement on the investment.
Absolutely. I think we, and in the community land trust role, are working to make sure that the individual does not put in more than the percentage, because their resale is capped. We don't want them investing more than they're going to be able to get back out of the house. Becca, perhaps you could answer Jack Mesner's question. Are there costs, subsidies after the initial subsidy, or does it become self-supporting?
I think that's like the $1 million question. I in talking to CLTs throughout the country, that is the question. In theory, if a CLT has a certain base of ownership, it can become a little bit more self-sustaining because it's a $25 a month administrative fee. Like that doesn't go too far, but that multiplied over like hundreds of units can start to support the organization a little bit. But I think that you're probably looking not huge subsidies upon each resale, but a small amount needed to prepare the home for resale. Some of it depends on market conditions. If the market really drops down, then just like anybody, right? It's just a subset of the real estate market. So it doesn't, I have yet to find a case study where it is like totally self-sustaining on only the sale and resale of properties itself, but there are plenty of CLTs who have been very creative in generating additional income besides the sale of homes, and they are nearly self-sustaining. I mean, relying on only $15,000 of foundation funding a year. I mean, like really, really pretty small amounts. So they have ways to become self-sustaining, but not necessarily just due to the houses.
I have a question about insurance that is not completely answered by the written answers I received. What happens with insurance if it's not required in the initial package, but it is one of those things that it would be good? Flood insurance is one that I thought of. You're not always required to buy it, but if you live in a certain area where there are floods, you weigh, as a buyer, when was the last flood? How bad was it? And that kind of information to decide whether or not flood insurance, it's a risk reward kind of thing to find out if insurance is really needed. So you decide not to buy it. And then there's a big flood. What happens? That's what if there's a tornado? I don't know any place that sells tornado insurance. But what happens if you live in a tornado area and your whole community gets wiped out? I mean, what happens then? Not only to the individual owner, but to the CLT.
So as it would be the same as a market rate house, right? If that were to happen, there are some incidences and in home ownership that some risks of home ownership that you can't completely ever take away, right? Like if you live in your house and there is some crazy flood that happens and you don't have flood insurance because you're not in a floodplain, I mean, presumably you'd work with your insurance carrier, you would do everything you can to try to get that covered. And the CLT would absolutely do that and assist a homeowner in any way we could. I think Megan gave an example of a homeowner with a roof, trying to do everything we could to help work through that issue. And there's no special cure that says that because it's a CLT property, some of these really unfortunate, risky things that happen in home ownership can altogether go away. We require homeowners insurance. We would require any additional insurance that is pertinent to the location of the home. But if something were to happen outside of that, we would do everything we could to try to help that homeowner. They would never be left totally alone without our assistance, but we couldn't guarantee that just because it's a CLT home that the result would be anything much different from market rate home ownership in those unfortunate instances.
And how does the that's the first half of the question, but how does the CLT protect itself from events that affect numerous houses that they have an ownership, the land ownership of, and have underwritten this buyer's program?
How does the CLT protect itself from like damage to the land? Is that your question? Am I understanding that correctly?
Damage to the land or their portion of the house. I mean, you've got an interest in the houses that are on that land. If there is significant damage that makes it uninhabitable.
The CLT actually only has an interest in the land. The CLT doesn't have an interest in the house. So as far as like possible, like homeowners insurance covers incidences on the land, like liability type issues on the land. And besides that, at least on the multiple insurance agents and brokers and carriers we talked to when deciding our insurance, there's actually, because it's like dirt, right? There's not a lot of, there's not a lot of liability just in the land, owning the land itself. But yeah, if you're saying like, if the house burns down and then like, what's the value of the land? Is that kind of what you're saying? Is that how you're saying that the CLT has an interest in the house?
Well, yes, I mean, yeah, an interest in continuing the program.
Mm-hmm. Yes, absolutely. And so that's why we require the insurance and yeah.
Okay.
And I think I mentioned
I'm not understanding some part of it, but I'll figure it out. I'm not going to take any more.
Well, you know what? Please, let me go back to my last slide. Please just email me and I am happy to answer more in depth. I can give you a call.
Very much. Yeah. I would have to study this a little bit more than just the program to quantify my question better.
And absolutely, thank you for mentioning that, because I would say that it probably took 3 times for me to hear about a community land trust before I was like, what are you talking about? It's a very different concept, and there are a lot of components to it. So it doesn't come absolutely easily the first time.
Okay.
One of the things, I'm sorry, go ahead.
I was just going to say, I think we have time for one more question. We have a hand raised. It's been for a little bit, Megan. And so I just thought we'd try to get to Shalonda, if you wanted to ask your question.
Yes, thank you. Hi, Becca. You guys are doing a great job. I really appreciate this workshop. It kind of lends to Miss Edna's question, and then I think maybe one in the chat. but I know either the county or the city, they do a valuation where they separate the land and the structure and put a value to both of those. When you guys get an appraisal, do you get an appraisal that separates the land from the housing as well, or is it just one lump sum and then there's a separate formula to figure out what the land is worth and the house is worth that you guys do internally? That's the question. Hopefully it's clear. Let me know if it's not.
Sure, Becca, do you want to answer that?
Sure. So when we get our appraisals, it is they're separated. So there's the market value. We get the market value as though it's an unrestricted deed house, just a straight fee simple market rate house. We get that. And then we get the value for just the improvement. So that is what our buyers are taking a loan out for, just the improvement value. And then it doesn't specifically call out the land value, but we just subtract market rate from the value of the home. And that's in part how we base our land value. And there's also some calculations used with the monthly $25 land lease fee. So those together are used to create the value of the land.
And this brings up a good point, which I not really even get into, but there are often questions in neighborhoods of like, well, is this going to impact my property values because you're selling this house below market value? A community land trust home cannot be a comp for a non-community land trust home. It would be like comparing a condo to a single family home. So the appraiser cannot use that as a comp. You all had great questions, and I again just appreciate the opportunity to share information about this option. I generally will say to people, it is not for everyone. It is an option. It is an option for people who are feeling like I can't get into this home ownership market, and this is one of the ways I can build wealth. I keep being in this rental cycle where my rent goes up year after year after year. I mean, one of the beauties of a land trust is you've got a 30-year fixed mortgage. So your interest rate may vary, but your monthly payment is pretty stable.
And I am going to wrap up, Megan, if you're good.
Sorry.
We're right there at time, and I just want to make sure for those folks who joined a little late, and I see it coming up in the chat as a question. Yes, this webinar will be available. It might not be this recording, but one of the 3 that we will be posting online, as well as anybody who attended will be receiving an FAQ document after all 3 of these have concluded. So you can also see questions that were asked in other webinars that you didn't attend, as well as the slides and a survey to kind of gauge where your community organization, group, or jurisdiction is in using the community land trust model that can be incorporated into the regional business plan of this tool. Thank you again. Megan has her contact information up there. Megan, you might just want to drop it in the chat if you haven't already. It looks like Becca just did that. And you can also contact me and we can get you in touch with Megan and Becca as well as part of this process. So thank you everyone for being here, and have a great rest of your day.